Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. In the last week, I have done a video on how to select a sector using technical analysis, and we have discussed intermarket. We have discussed commodities rally equals to the equity sector, and there are we used ratio charts over there as well, which indicates the outperformance and underperformance. In this video, I'll be discussing how to select stock using technical analysis. Well, I always use the top-down approach. If you have seen my videos, I always try to use the top-down approach, be it a weekly chart, monthly chart, coming on to the a daily chart, then the lower time frame, which is very, very important. If you have seen my ratio analysis chart in the last video when I was discussing the sector, you can use the same theory into the stocks as well. If you think that the sector is going to outperform, and you can try onto the stocks which stocks will outperform in those sector. So, and that's the way you can try it out. In this video, I'll be discussing most of the stock selection process for trading. So first, I would suggest if you're using technical analysis, the most important one is define your strategies. I've done a special video on swing trading as well. In this video, I'll be discussing stock selection process, which is very, very important, and I've got many feedbacks that how do you select the stocks after the sector. So first, define your strategy, stock basket, and that's most people lack, because people believe that they are trading large caps, futures. It doesn't mean that if the stock is into the future is always a large cap. There are mid cap stocks as well into the future. So you need to create a basket. Do you want to trade the market cap wise the highest 100, or you want to look for a mid cap? You want to look for a micro cap, small caps? So here you have to define a strategy and basket, which is very, very important. Filtering process. So I'll just go through some of the process point by point. First, look at how you should define this strategy. The most important is what type of charts you are using. So there are a number of charts. There are bar charts, there are candlesticks, Heikin-Ashi, Kagi, point and figure, Renko. If you look at the new into the markets, so you have to decide what type of charts you want to trade. So every type of charts will differ upon the movement of the prices. So this is very, very important. So generally bar and candlesticks are same, the body is the difference, and candlesticks are the oldest form as well. So it really helps you out to find out continuation pattern, reversal pattern. If you're using Kagi, if you're using point and figure, if you're using Heikin-Ashi, they generally help you to identify the trend continuation pattern. So you need to define what kind of charts you want to use. Second is price action, open, high, low. So if prices are X days highs, I've done a strategy as well. When price hit 5 days high and above XYZ average, it's a good bullish momentum. When price 5 day below the XYZ average, you can look for a short opportunity. So you have to decide why I'm using this X days, because you want the stocks which are into the momentum. Stocks are stuck into the range will not help you much. But if stocks, I have done a video on investment as well, where prices are breaking around 30 days highs, previous 2 months highs, and there is a momentum going on. So you need to decide what kind of strategy you want to play and use this parameters. Moving average, which is very, very important. Golden crossover, which is 50 above 200, death cross, which is 50 below 200. Some people play guppy averages, where there are 6-7 averages, short, medium, and long, and if the prices are above those all the averages, they look for buy. If prices are below those guppy averages, they look for short. So try various moving averages. It's not necessary that you have to use the uniform of 50 and 200. I sometimes even use 55. Sometimes use if you are looking for a commodity, I sometimes use 58 as well on copper prices. So it depends on backtesting. Try to find out backtesting which is very supportive on the daily time frame or weekly time frame, whatever you're using. Oscillators, you need to understand which oscillators helps you the momentum. As I say, RSI is for stamina of the momentum. MACD is generally a good trend change decider. If you are playing stochastics, then you are just playing a momentum based trade, then you should use stochastics. If you are looking for a 15 days, 20 days, 30 days, or 3 months trade, stochastics won't help you out. So you need to understand what kind of oscillators, understand the strengths and weakness of those oscillators if you are using this strategy. And multi-time frame analysis, which is very very important. I'll show you the charts as well how to use the multi-time frame analysis. Stock basket, uh, as I said, depends what kind of trader you are, what kind of investor you are. If you're looking for a blue chip into nifty 50, nifty 100, nifty 200, if you want to play the all basket of mid cap, small cap, or even large caps, nifty 500 is there. If you want to just play FNO stocks with liquid options, then you should look for a FNO stock with options with liquid volumes, which means that the volume should be higher. There should be less difference between bid and ask. uh, all instruments are available. Some people look for micro caps into the BSE NSE as well. So there are all instruments available. You can create a customized basket of stocks where you think that I know some people who play fundamentally but look for an entry on the technical base. So if you think that this 10-15 stocks are very very strong fundamentally and you just want to look trade into those stocks, create those basket. When you find an opportunity depending upon the strategies, trade them. Filtering process, and this is, as I say, if you are doing this strategy, automatically the stocks get filter out. Say probably it might happen that 10 stocks filter out, 15 stocks may filter out of your NSE 500 basket or Nifty 500 basket. uh, which stock should you trade? Now, what I do is I generally look for a filtering system or the ranking system, I would say. Depending if there are 10 stocks, I rank them depending upon risk parameter, depending upon the risk to reward ratios, depending upon the strength that they have shown in the volumes, XYZ. So you can depend upon the ranking system. I generally use the ranking system manually. You can code it in a manner you want, so automatically show the ranking system as well. So use this ranking system, which definitely helps you to convince, take a convincing trades out of those 10-15 stocks filtered into your defined strategy filtration. Now, multi-time frame, this is very very important, and I generally use this many a times. Say if you are using the defined strategy, if you have used moving average, if you have used 5 days high, if you have used oscillators, now try to use this on different three time frames. I generally use three time frames because I know if I'm using the weekly over there or daily over there. So if you look at the left side of your chart, there is a daily. I know if the daily trend is bullish, so I will look for a bullish setups when it comes to the hourly charts. When there is a bullish setup building up onto the hourly charts, when their prices are gaining the momentum, especially I would say, or trading at support. And 15 minutes in, if you look at the right bottom, it's a 15-minute chart. If there is a reversal being happening around the support zone on hourly, because I know that the daily time frame is very very positive, so hourly and 15 minutes will give me a good entry considering the risk rewards. So I just look at the hourly where the basing is formation, and the 15 minutes a good entry point onto this. So you can use multi-time frame. If you don't want to look for a very very short term, look for weekly, daily, and 4 hours. I also use that for slightly if I want to look for a 3 to 6 months trade. So this you can use onto the multi-time frame. Now there is always a debate how much and number of oscillators you should use. So there are people on social media, on WhatsApp, they are posting charts where they have 2 3 oscillators, 3 4 averages, and they don't give importance to price. I would suggest give importance to price first, and this is very very important. So before you implement your studies, try to look for various studies onto the multi-time frame charts. Plot studies onto your charts, which will you help you, because prices are always a leading indicator and oscillators and averages are always a lagging indicator, which means that the price will lead and automatically averages will, if price is going from 100 to 150, the automatically average will go higher, RSI will go higher, MACD will go higher. So you need to understand that price is the leading factor, and you can't use n number of averages, n number of oscillators to mitigate that price action. So price action is very very important for me as a leading indicator. So define first the leading indicators what you want to look at, then lagging indicator. Number of studies, I would say don't look for more than 2 to 3 studies on your charts. Couple of moving averages and one oscillator is fair enough. As I said, use 2 averages, one oscillator, and if price is breaking out 10 days average, 5 days average, what kind of strategy you want to build up. And this is very very important. So always keep a focus on leading indicator and give less importance to lagging indicator, and that's where the ranking systems help you out. If my leading indicators are pointing out that the momentum is into the stock, lagging indicator will automatically follow the leading indicator and it will automatically turn the bullish or bearish, whatever the leading indicator is indicating to you. So always give more importance to leading over and less important to lagging. But yes, you need to understand the oscillators. If you are using, what kind of oscillators are you using, what kind of averages you are using, which is very very much important when you define the strategy. So that's all onto the how to select stock for trading. And in case you are using some of the defined system and you want to share, do share in our comment. And in case you have any doubt on how to build your own I would say defined strategy, want to discuss on to defined strategy, do comment. I'll definitely reply and try to give you more a clear action on how to use the defined strategy in case you have any doubts. So signing off, Brijesh Bhatia.